Hi, welcome to this quarterly report of strategic wealth preservation. And I want to walk you through the charts of gold, silver, the US dollar index, and an ETF that holds a basket of precious metals. So you can see how they're all performing as a whole. So let's jump into the charts and take a look at what they are telling us. Now, if we take a look at the daily chart of gold, this is the gold futures chart. We can see more or less for this year, we saw an early run up where it was becoming a defensive safe haven play. But once the big selling in the stock market took place, fear set in. There's a natural tendency for gold, precious metals to get sold off with the overall broad market. It just is forced liquidation. When people get nervous, they start to sell everything. And we continue to see gold struggling here. This past week, we saw a very sharp decline in gold. Now it's been trading sideways for a couple of days. It looks like it's primed and ready to head lower. I think it could drop to around $1,665, somewhere in that range over the next few days. And I think the big picture, though, is still very bullish for gold. I just don't think we're going to get that big rally, that bull market phase for gold or silver still for several more months, if not till 2023. So let's take a look at the big chart, a big picture of gold. If we go to the quarterly chart here, we can see that we've got this very large run up from the 2000 low. Now, this was a time when we actually saw commodities be the most undervalued asset compared to stocks and the ratio that they have. We are back in that same scenario, believe it or not, that we had back in 2000. Commodities are the most undervalued compared to US stocks, and they're really primed and ready. They've already started what I think is the start of a super cycle to the upside. This is a multi-year play. You can see this last one was 5, 10, 12, 13 years before it topped out. Well, we're only a few years into this one. Keep in mind, each bar here is 3 months. It's a quarterly chart. Now, what I think is important here is we're going to be seeing gold trade probably in this range here for a while between those highs and these lows. There's potential for it to come down to around this 1670, 1660, these lows that we saw back over here. And maybe it's going to consolidate and build a launch pad before the market really becomes favorable for a big move higher, which could be 2023, maybe even late 2023, depending on how this unfolds. So we have seen a big pullback in gold with the sell-off in equities, but also because we're seeing a very strong rally in the US dollar. US dollar has started to break out of this big rally phase. Let me just grab the tool here. So we had a big rally in the dollar. It's been flagging sideways here. And now it's breaking out and starting a run. And based on this previous move, it's showing us that we could see gold, the US dollar index, move up to this 120 mark. And if that continues to happen, we're going to see a lot of pressure, I think, on metals, and they might not rally very much. They might continue to struggle and sell slightly lower and trade sideways. But I do think if the dollar does get up to this level, that's when we're going to see a very big rally start in precious metals. Because at that point, I think we're going to see the dollar trade sideways or reverse and come back down, and that will fuel a massive move in precious metals. And at that point, we'll probably be out of any selling pressure that the stock market has. I think we're in a bear market. I think we could continue to see the bear market unfold for maybe several more quarters. And if we are in a bear market, gold and silver tend to sell off or trade lower. So there's a little bit of work to be done before I think we see the next big move in the precious metals market. So let's go take a look at silver. Silver down a little bit. Overall, it's put in a nice base. It's had a rally up. It has this pattern, a lot like gold in terms of it's had a very strong rally up. It's been flagging down in this pattern here, which is a very strong chart pattern, pointing to higher prices up into this 36 range would be the next upside target when silver gets some traction. So both gold and silver have very strong long-term patterns. If I just go back to gold, I can show you this longer-term pattern here that is here. We've got this rally up, and we've got this bull flag pattern forming, which the next upside target when gold starts the next rally should take us to $2,600, maybe $2,700 an ounce. Could go way beyond that, but that is the first technical measured move based on these charts. So let's take a quick look at this ETF, GLTR. The only reason I like this is because It is a basket of precious metals. It's gold, silver, platinum, and palladium. So we kind of get to see the precious metals basket as a whole. And what's really nice about this is it's creating this rounding formation. And more recently, we're in this like bull flag pattern, which you could argue this is a cup and handle pattern, which is a very, very strong price pattern. Typically, you can see the depth of the cup. So from the upper rim all the way down here, if we start to get a breakout, that distance could be extended to the upside. If this is a true cup and handle, a lot of them actually will move 2, 3, or 400% the distance of this cup and handle. And this is a major pattern. So we could be going into something very big and explosive over the next 5, 10, 12 years going forward with this next super cycle. So that kind of gives you a high level view of where we are right now. Precious metals are out of favor. If you're accumulating physicals, this is the type of condition you want. You want it selling off. You want it to be pulled down from a rising dollar. You want it to be pulled back from sellers, forced liquidation fear, because naturally it's going to want to rebound and move higher going forward. Anyways, I'm Chris Vermeulen from thetechnicaltraders.com, and that's your trader tip.